Hello everyone, and welcome back to Investment Research. I am Simo, your equity research analyst, and today we are doing a thorough and updated deep dive into SoFi Technologies, ticker SoFi, using the latest market snapshot for October 20th, 2025, and the most recent company reporting. I will walk you through the intraday action, the broader trajectory, the business fundamentals, the profitability story, the key risks, and what to watch next so you can make a clear investment decision. Let us start with the immediate market picture. As of today, SoFi is trading around $28.07 per share with a meaningful intraday move higher of about 5 and 7%. The market opened today near $27.25. The intraday low was about $27.08 and the intraday high reached about $28.42. Volume for the trading session is running in the low tens of millions of shares, which shows active interest and participation from both retail and institutional traders. These price and volume dynamics tell us that momentum is in SoFi's favor today and that market participants are reacting to either macro flows or company-specific catalysts. Now, let us zoom out to the one-year range and the recent performance. SoFi's 52-week low sits near $8.60 and the 52-week high sits near $30.30. From that low to the high, SoFi more than tripled in value over the past year, which is a dramatic move that reflects a combination of execution momentum, a renewed growth narrative, and improved investor sentiment toward fintech names. Being close to the 52-week high means expectations are high, so upcoming quarterly results and any guidance updates will be important catalysts. Let us look at the company results and operating fundamentals because that is where the long-term investment case stands or falls. SoFi reported strong second quarter results with record adjusted net revenue near $858 million for the quarter and GAAP net income that returned to profitability for multiple quarters running. Membership growth was substantial, with membership rising into double-digit millions and product per member metrics improving. The technology platform, including Galileo and the bank-related business, are meaningful drivers of high-margin revenue. Management raised its guidance for full-year adjusted net revenue and for GAAP EPS based on the strong first-half performance and the constructive outlook. These operational results turn SoFi into a much more credible full-service fintech and digital bank story than it was a few years ago when it relied heavily on single product streams. Next, I will cover the balance sheet and deposit dynamics because this matters for margin and profitability. SoFi's deposit base has expanded meaningfully as members move checking and savings and direct deposit into the SoFi ecosystem. Reported deposits are in the tens of billions, which provides a low-cost funding source that improves net interest margin and reduces reliance on wholesale funding. Growing deposits combined with an improving loan book gives SoFi a structural lever to convert revenue growth into sustainable profit growth. This is one of the core advantages of having a national bank charter. Let us talk valuation and how to think about the multiple you are paying. On a trailing basis, the price-to-earnings ratio is elevated and the forward PE also indicates a premium multiple versus legacy banks and many consumer fintech peers. The premium reflects expectations of sustained member growth, cross-sell strength and margin expansion through the banking and technology mix. If you are a value-oriented investor, you will want to see a clearer path to GAAP earnings expansion from here. If you are growth-oriented, you must believe SoFi can continue to scale members, increase products per member, and grow high-margin revenue from Galileo and the technology platform. Relative to the growth, the premium is not unreasonable, but it does require execution to be nearly flawless. Now, the core investment thesis summarized into 3 points. First, SoFi is building an ecosystem and the cross-sell opportunity is real. If the company can convert new members into multi-product customers, average revenue per user will rise substantially, and that drives outsized lifetime customer value. Second, the bank charter transforms the funding profile and the economics of lending, which should expand net interest margin and improve profitability as deposits scale. Third, the technology platform gives SoFi an additional high-margin B2B revenue stream and optionality to monetize partnerships with other fintechs. These three pillars form the bull case. Now the counterpoints and the risks you must weigh. First, valuation risk. With shares trading near year highs, investors have low tolerance for any execution missteps. Second, interest rate and macro risk. SoFi is sensitive to rate moves and to consumer credit conditions which affect loan demand and charge-offs. Third, competition risk. Both legacy banks and nimble fintech rivals are investing heavily in digital products and deposits, which compresses differentiation. Fourth, regulatory and operational risk. Operating as a bank adds regulatory overhead and complexity, and any compliance misstep could be costly. Finally, execution risk around integrating and scaling technology operations at profitable margins is real and must be monitored each quarter. Here are the specific data points and signals I will watch between now and the next major reporting date. First, member growth and products per member. A stable step up in products per member gives confidence the ecosystem strategy works. Second, deposit growth and deposit cost. Rising deposits at low cost improves margins. Third, Galileo and technology platform revenue and margin. Continued double-digit growth in platform revenue supports the high multiple. Fourth, credit quality metrics and net charge-offs. Improving or stable credit metrics reduce downside risk. Fifth, management commentary on capital allocation and share repurchases or acquisitions. That gives clues to how management intends to monetize growth. The next earnings date is approaching in the coming days and will be the primary short-term catalyst. For traders and technical viewers, here is a concise read on price action and levels. The stock has support around the mid-20s and resistance around the $30 level. A clear breakout above the $30 level on volume would signal continuation of the move, while a failure to hold support near the mid-20s could lead the stock to revisit lower levels. Volume spikes on up days show real conviction and are healthy signs for continuation. Use position sizing and stops that match your risk tolerance. Now, a few practical trade and positioning ideas tailored to different investor profiles. For long-term investors who believe in the ecosystem thesis, consider accumulating on meaningful pullbacks and focus on dollar cost averaging while monitoring quarterly member engagement metrics. For shorter-term traders, look for momentum continuation on strong volume and use tight risk controls. For income-oriented investors, this name is not a traditional income story yet, so it is not ideal until the company demonstrates sustained free cash flow and a capital allocation policy that includes returns to shareholders. Always size positions to what you can afford to hold through volatility. To close, let me give you a crisp conclusion and next steps. SoFi is no longer just a niche online lender. It is becoming a full-service digital bank with a growing technology platform. The last year of price action reflects that transformation, but it also places higher expectations on the company. If you believe SoFi can continue to scale, members increase product penetration, and expand high-margin platform revenue, then the company offers an attractive multi-year opportunity. If you are skeptical about sustained profitability or worried about macro and competitive pressures, you need a clearer margin of safety before allocating significant capital. Watch the next earnings release the deposit trends, Galileo growth, and the products per member statistic closely. Those items will determine whether the stock can sustain its current valuation. That is the deep updated look on SoFi Technologies for today, October 20th, 2025. I am Simo, your equity research analyst at Investment Research, and I hope this gives you a clear data-driven framework for how to think about SoFi. If you want, I will convert this into a tighter script for narration with pacing cues or create a bulletproof fact sheet for your on-camera notes. Let me know which you prefer.